Hi everyone, welcome back to this week's Technical Insights. I hope everyone had a good rest over the Good Friday long weekend. We'll round up the shortened trading week and also the last trading day of the first quarter last Thursday. Most global indices managed to finish in the green on the last trading day of first quarter. So let's dive in and do a quick recap of how the markets have ended. Our Singapore Straits Times Index ended last Thursday lower by 0.85% on profit taking, but managed to register its fourth consecutive winning weeks. In Asia, markets ended the trading week pretty strongly. Japan Nikkei 225 gained 0.5% last Friday, driven by chip-related heavyweights amid the heavy foreign buying on a weaker yen, an expectation that the Bank of Japan will stick with their loose monetary policy. Shanghai Composite Index jumped 1.01% on Friday as optimism from the evidence of state-backed buying offset lingering worries about the property sector. Hong Kong Hang Seng Index rose 0.91% on Thursday after President Xi Jinping meeting with US business leaders instilled optimism about investment flow into Hong Kong and China. Hong Kong stock market was closed last Friday and today for public holidays. Xi Jinping pledged more policy support to improve China's business environment in a meeting with more than a dozen US business executives from companies that include Blackstone, Pfizer, Qualcomm in Beijing last Wednesday, underscoring Beijing's effort to restore confidence to arrest the slide in the foreign direct investment. He also dismissed the narrative that China's economy was collapsing and the growth had peaked, vowing a greater scope for foreign businesses and deeper reforms. On the US side, the Dow Jones Index was up 47 points last Thursday, or 0.12%. S&P 500 Index added 6 points, or 0.11%. Nasdaq Composite, however, inched lower by 20 points, or 0.12%. Next, let's look at the weekly performance of the key major indices around the world. Blue chip Dow Jones Index was up 0.84% to 39,807 points. This is a new record close for the Dow Jones Index. Broad-based index S&P 500 rose 0.39% last week to 5,254 points, hitting a fresh all-time high on last Thursday, registering its best first quarter performance in 5 years. Tech-heavy Nasdaq Composite Index, however, lost 0.3% last week to settle at 16,379 points, but ended the first quarter up more than 9%, led by NVIDIA. Driving the gains this quarter, NVIDIA, the market leader in AI tech boom, is showing no signs of slowing down. The AI stock rocketed 82% for the quarter and gained 14% in March alone. In Asia, the Hong Kong Hang Seng Index swung back into the green last week, adding 0.25% to close at 16,541 points. The Hang Seng Tech Index followed the lead from the Hang Seng Index and rose more than 0.63% to 3,477 points. For the whole week, our STI Index managed to close in the green despite the 27 points drop on Thursday. We are still up 6 points for the week, or up 0.19% to settle at 3,224 points, touching a new year-to-date high on Thursday at 3,262 points. This will be the STI fourth consecutive winning weeks, and the big winner last Friday on the STIs were YangZiJiang Shipbuilding and DFI Retail Group. So for this week's analysis, let's study the performance of these two big winners. First, let's have a look at YangZiJiang Shipbuilding. I think YangZiJiang Shipbuilding needs no introduction anymore. We have been covering this counter since the 4th of March. If you missed the earlier video on YangZiJiang, you can watch the videos on our weekly Technical Insights playlist on our YouTube channel. First, I would also like to give a shout out to the 10 subscribers that gave us a thumbs up in the video last week, where we provided an update on YangZiJiang performance and their projections. That gave us the encouragement to continue updating you guys watching with the latest content and developments in the market. So if you have not subscribed, do hit that subscribe button and give us a like on this video. So in last week's video, we updated that for traders and investors who managed to buy into YangZiJiang Shipbuilding shares around the pullback at $1.67 or $1.68 area, the next resistance level to watch out for will be the upper bound of the Bollinger Band over here at around the $1.90 level. That will give you a 30% upside. Fast forward to this week, YangZiJiang share price has already hit the $1.90 level, which we projected last week, and probably hitting a high of $1.92 last Thursday before closing at $1.91. So where do we go from here, you may ask? above the $1.91 level or $1.92 level, there is no longer any previous key support or resistance level to reference to. In such scenario, I would prefer to put in a trailing stop. A trailing stop is a modification of a normal stop order that can be set at a predefined percentage or dollar amount from the security's last price. If you study the recent pullbacks of YangZiJiang share price, the biggest pullback was something that we saw on 12th of March, where we saw YangZiJiang share price retreated about 3.74%. So I'll put around a 5% trailing stop loss order from last Friday closing price of $1.91. This will lock in the earlier gains from $1.67 to $1.81. If YangZiJiang share price move higher, the stop loss will move up in tandem with YangZiJiang share price. If YangZiJiang share price move lower, the stop loss will protect the gains that we made earlier. Next, let's take a look at DFI Retail Group. We covered DFI Retail Group on the 11th of March video. So this will be another follow-up from one of the counters that we covered earlier. On 11th of March video, we saw that DFI Retail Group share price has a gap up and closed around the $2.14 level. Here, I would like to quote the analysis that we have done previously. Based on the momentum reading on the indicators, the rise in DFI share price is likely going to continue, and the next resistance level to watch out for could be the low on August 2023 at around the $2.32 level, which is a possible support turn resistance level for DFI share price to watch, before the price retreat back into the primary downtrend again. DFI share price did indeed continue to rise after the 11th of March as projected, but peaked around the $2.23 level on the 14th of March. DFI share price then retraced to a low of $2.02 last Wednesday before jumping 2.87% last Thursday to close at $2.15. DFI share price is still within the long-term downtrend that we have identified in the earlier video. The upper bound of the downtrend price channel is now around the $2.20 or the $2.23 level and will continue to act as a resistance level to watch out for. The upper bound of the downtrend channel now could also found confluence with the Bollinger Band upper bound, making it a tougher level to break through. Hence, if DFI share price retests the upper bound of the downtrend price channel at $2.23 or even the upper bound of the Bollinger Band, traders may consider taking a short position targeting the lower bound of the Bollinger Band at the $1.95 level or even the year-to-date low at $1.93. And these are the updates that I have for you guys this week. Do remember to like, share, and subscribe to stay updated on our latest market updates and programs. And I'll see you again next week in the next Technical Insights.